What do gas prices have to do with your rent? The core inflation secret economists actually watch. You've probably noticed that gas prices swing wildly from week to week. One month you spend $40 filling up your tank, and 2 months later, that same tank costs $65. Yet the Federal Reserve doesn't panic every time oil spikes. And that's because economists track a different signal entirely. That signal is called core inflation. And understanding it gives you a window into how the entire economy really moves. Picture a snow globe sitting on your desk. Shake it and you see a blizzard of white flakes flying everywhere. Total chaos. But wait 30 seconds and the snow settles. The little house inside never moved. Inflation works the same way. It measures how much prices across the entire economy rise over time, like the overall temperature inside that globe. Core inflation acts like the house, the stable structure underneath all the noise. Economists strip out two notoriously jumpy categories, food and energy, to reveal what prices actually do when you remove the weather. How it actually works. The Bureau of Labor Statistics calculates the standard inflation rate, called the Consumer Price Index, or CPI, by tracking the prices of a giant basket of goods and services that a typical American household buys. Think of this basket like a real grocery cart. It holds everything from apples to airplane tickets to apartment rent. Each month, BLS employees check prices for hundreds of these items across the country and average them together. Core inflation uses that same basket, but removes food and energy prices before running the math. Economists justify this subtraction because food and energy prices respond to forces far outside the domestic economy. Droughts in Brazil, wars in oil-producing regions, hurricanes disrupting shipping lanes. Consider this. A single freeze in Florida wipes out orange crops and sends juice prices soaring overnight. Yet that spike tells you nothing about whether your landlord will raise your rent next year. Next, examine what core inflation actually captures once those volatile items are out of the picture. The remaining categories include rent, medical care, clothing, education, and services like haircuts and car repairs. These prices move slowly and deliberately. They reflect wages, business costs, and long-term demand. The Federal Reserve pays especially close attention to core inflation precisely because it reveals the underlying momentum of price growth, the kind that doesn't reverse itself in 30 days. The Fed prefers a related measure called the PCE price index, short for personal consumption expenditures, which the Bureau of Economic Analysis publishes monthly. The PCE tracks how people actually shift their spending when prices change, making it slightly more flexible than CPI. Both measures strip out food and energy to produce their core versions, and both give policymakers a cleaner read on whether inflation is truly accelerating or just temporarily spiking. The Fed targets core PCE inflation at around 2% annually. Above that target, the economy risks overheating, prices outpace wages, and erode purchasing power faster than people can adapt. Below that target, the economy risks deflation, which may sound nice, but actually paralyzes spending as consumers wait for prices to drop further before buying anything. 2% acts like a Goldilocks zone, warm enough to encourage borrowing and investment, cool enough to keep costs manageable. Why this matters to you. Core inflation directly drives the Federal Reserve's decisions about interest rates. When core inflation climbs above the 2% target and stays there, the Fed raises its benchmark interest rate. That rate increase travels through the entire financial system like a current through a wire. Mortgage lenders raise their rates, credit card companies raise theirs, and auto loan costs climb alongside them. A 1 percentage point rise in mortgage rates adds hundreds of dollars to a monthly payment on a $300,000 home loan. Your rent tells a particularly clear story about core inflation. Shelter costs represent the single largest component of core CPI, and landlords raise rents when their own costs, maintenance, property taxes, financing increase. Watching core inflation gives you advance warning that rent pressure may intensify before your next lease renewal. Grocery prices, by contrast, sit outside core inflation. They spike hard and then often retreat, making them unreliable guides for long-term planning. Investors monitor core inflation closely because it shapes the entire interest rate environment. Rising core inflation signals rising rates, which make bonds more attractive relative to stocks, and push borrowing costs higher for companies. Falling core inflation signals rate cuts, which typically boost stock valuations and make growth investments more appealing. Even if you only own a basic retirement account, core inflation trends help explain why that account swings in value month to month. What this means for you. When core inflation runs hot, the Fed raises rates and your borrowing costs climb. So pay down variable rate debt aggressively and lock in fixed rates wherever possible before the next round of hikes hits. Common questions. Q. Why do economists exclude food and energy from core inflation if we buy both every single day? Air. Food and energy prices react instantly to supply shocks, storms, geopolitical conflicts, crop failures that resolve themselves within months. Including them would cause the core inflation reading to whipsaw up and down, masking the slow-moving price trends that actually reveal where the economy heads over the next year or two. Economists need a stable signal to set long-term policy, and core inflation delivers exactly that. Q. Does a low core inflation number mean prices stop rising altogether? Air. No. A low core inflation number means prices still rise, just at a slower and more manageable pace. At the Fed's 2% target, prices roughly double every 35 years. The goal isn't zero inflation, it's stable, predictable inflation that lets businesses plan investments and workers negotiate wages with reasonable confidence about what the future holds. Your takeaway. Core inflation strips away the noise of gas price swings and grocery spikes to reveal the true underlying momentum of prices in the economy. The Federal Reserve watches it obsessively because it drives every major interest rate decision, and those decisions reach directly into your mortgage payment, your credit card bill, and your investment returns. Track core inflation monthly alongside the Fed's statements, and you'll start reading economic headlines not as random noise, but as a logical chain of cause and effect that you can actually use.